Hello, Dr. L here. This is a video to show you how I and my clients cashed in on chaos on Wednesday, June 27th, 2018. This is a chart from my daytradingforecast.com website. $297 for a 3-month subscription for access to that site. And there's a page there called SP KISS. KISS is Keep It Simple, Stupid. And on that page there are several charts. This is the Moontide minus tide version in red. Times on this chart are in Eastern Time, and moontide is simply a calculation, complex calculation that tries to combine all the planetary activity into one line and figure out what the energy field that affects the S&P is doing in the very short term. So then what my software does is it takes this forecast, finds the major turns during the day, and marks those as high probability times for a profitable trade. Simply times when the energy should be shifting. Now, here's a tide time that comes before the normal session open. Those are shifted to 9:31, which basically means 9:31 trade time means be ready to join a move in progress. This is, I think it was 12:22. This is a normal one looking for a turn. So this is the Moontide forecast, and what you get for the hotline trading are a couple trade times. Never more than 3 per day. And this one after the close here is not used for the hotline. Now, on daytradingforecast.com, there's an alternate forecast called XT2 Plus. And overall, it's sort of a secondary backup forecast. They're simply two different mathematical models. And it's sort of like the competing mathematical models for the weather forecast that you see. Finding the turns, Moontide does a little bit better than this one, but this one has a property that I still don't fully understand, but I really like it. Here the green XT2 says up to a peak and then down, and that is what we got. Once we started down here, it's incredible how closely that forecast fit. Yeah, I mean, this forecast is done months and months in advance, just based upon my theories of the energy affecting the market. So you can't ask for a better forecast than that. Now, in terms of trading a forecast, I try to reduce everything. The physical world is very complex, and finding tides from energy fields or trade times from energy fields gives you an edge. But I've tried to simplify it down to simply using some exponential moving averages. The rules are on daytradingforecast.com on how to trade moontides. But this is the 9:30 trade time. This is a 110-minute exponential moving average. These are 3-minute candles. Now my software lets me do moving averages in terms of minutes, not bars. But most programs do bars, so this 20-minute moving average here is 6 or 7 bars if you're using 3-minute bars. If you use 1-minute bars, then of course it'd be 20. This is the 110-minute, which I'll tell you a secret. It's 1 degree of moon motion. That's 110-minute, and this is a 440-minute. It's the basically gives you the trend of the day. So this first tide time here, there's the moving averages beginning to separate. That's the D part of MACD, divergence part. When they begin to diverge, probably about 32 here, you could see enough that you could jump in. Ran up here, came down here, this big bar kind of collapsed the rally. There's a sell, but because it's not near a trade time, it's not taken. So, and these bars are colored by the crossing of these two moving averages. Now here's what I call a little hook and go. You get a crossing up and then a crossing down, and that one came almost exactly on the trade time. But the 20 came below the 110 and then broke the 440, and the rest of the day was all down. So if you did nothing but follow the moving averages and act only near the trade times, you could have done spectacularly on this day. Now that's another story. I'll come to that in a minute. Now I'm going to show you some other charts. This is one that's not on the website that I look at most days. Early that morning I got up and I had a position on here at 27.22 and a half. Friday's close. I bought here, or this is Monday's close. On Tuesday I bought into this little rally. It looked like it might turn up overnight, so I put my stop right in at my entry point. Actually a tick above, so I would at least clear commissions, and went to bed. The morning when I got up, the market was going down. I didn't see the stuff here to the right, of course, but the market was selling off hard, and I looked, well, should I jump in and join that? But when I looked at my Helio chart, I saw Monday's bottom. Monday's drop started when price had lost the Mercury support here. This is Helio Mercury plus 45 degrees. Came down here and they bottomed on Helio Mercury. So when I saw this drop, I looked at Helio Mercury coming down here and noted it in the chat room that this could be some sort of a double bottom, and we could go up from here. So just looking at the market astrophysics and trying to understand what's going on in the world. Now, one thing that helps me is my Daniel chart, which is a very complex chart. I have a sanitized version on Day Trading Forecast. And in the evening email sent out on Tuesday, I noted that the moon could create some high volatility, and what I have learned is that on days when we have this purple line followed by this yellow line, we often get a high volatility. So the other thing that's on this, here was where I was seeing the Mercury support. Whoops, I guess I gave away what that line is. This yellow and red here did has this matching yellow and red resistance, and that did kill the rally. This is a cycle tracker. Its length is such that it can't get all of the move. But once that thing turned down here, there's no benefit in being long. Okay, but main point here is that I could anticipate high volatility because I've watched this chart for many years, and I've noticed that on days like this, we often get high volatility moves. Now, also on day trading forecasts on the secrets page are some vibration level charts. This is the chart for the wheel of 72, and on that page there are white, green, yellow lines and a secondary magenta line, and these vibration levels go in sets of nine points. Yellow here, yellow here, yellow here. Also, I could put on the website pivot prices. These are widely used by computer trading algorithms, and sometimes it's uncanny how good they are. When they line up with these vibration levels, they can be super canny. The high on Wednesday was exactly on R3, that 2748. That's also the level I pointed out on my Daniel chart. Now, we're starting out down here on a green one. So let me just count. Here's one green level, two green levels, three green levels, four green levels. That's 36 points. That's half of a wheel of 72. So it's a point where you could expect a turn just based on numerics. So it's gone up here, then it went further, and when it went further, it almost made it to the white level. The white level I found is often associated with downturns. So hit white, just shy of the white level here, came down here, one white level, two white levels. There's basically an 18-point drop, and that's 1/4 of the wheel of 72. Then we rallied up here, this white level, and started down. So here's one white level, two white levels, three white levels, four white levels, whoops, five white levels exactly. So this is all very hard to watch in real time, but it does instrument what's really going on. Now, wheel of 72 is driven by the moon. Larger scale factors, wheel of 360, driven by the sun. And on my secrets page, ESNAT 360, there are again 4 vibration levels: the green, the white, the yellow, and the magenta. And moves tend to go from one to another. So here's the yellow vibration level. And last week we came up here, not a real strong Friday. Overnight after Friday started dropping, dropped to the yellow, and these two sort of work together. There is a technical reason for that. Drop on Monday started when we broke there. And note here, yellow down to yellow. Bounce up to green, and we're coming down here. And this is where I woke on Wednesday morning when I got up. Now when we shot up, we hit the yellow. So from this yellow to that yellow is a harmonic 45-degree move on the wheel 360. And that's 45 points. So if you can catch that, you can do pretty well. Now also on this chart is a volatility forecast. Besides knowing about from my Daniel chart that it could be a high volatility day, this is a computation based upon the theory of resonance, showing high volatility days. Sometimes this seems to forecast price, but it's not really a price forecast. It's a volatility forecast. So it was saying Wednesday, high volatility day, Monday, high volatility day. So these vibration levels I watch carefully, and they help demonstrate the harmonics. It's hard to see exactly how things are going because things will overrun a little bit. Like this went a little bit beyond the yellow, and I call that fractal fuzz. People who try to use these exact points aren't seeing the real harmony that underlies the market, what's really in the structure. Okay, all those charts, forecast, simple trading methods, sounds good. How does L really do? Well, this is a chart of how I actually traded that day, and I must admit it was a very hectic day for me. A lot was going on at my house besides the markets. So let me start out on Tuesday. I'd bought at Friday's close and had a small position on overnight, but I put a stop one tick above break even. And when I went to bed here, these times, this is Interactive Brokers chart, 10-minute chart. When I went to bed, things were looking okay, but I didn't like that they were flat, so I made sure my stop was tight and I wasn't going to lose anything. Okay, that's where my overnight position was canceled out. Now I got up in the morning. It was a full moon. Full moon always wakes me up. So I woke up about 4:30. I'd seen the market had dropped, stopped me out, and bounced up below my stop. Everything at this point is looking down. I get up, we're sagging here, but this heavy line is basically the 440, and I looked at this high and thought, well, there is a 1, 2, 3, 4, 5, 6, 7 chaos clamshell possibility here. So I put a buy stop right where I'd gotten out. If we come back up through what was Friday's or Monday's close, that should attract a falling. I did not expect that really to be hit. But when the flash boys turned on their computers and said we're buying, boom. This is a 10-minute bar, and it went like from 12 to 27, 15 points in 10 minutes. So the S&P can move wildly. So that got me in. Now, real life, I am an early riser. My wife doesn't get up till about 8:20. When she retired, I told her she couldn't use an alarm clock. So right in here, my trade's looking good, but I have to leave the screen, go talk to my wife, and eat breakfast with her. Now, you can say I couldn't do that, and I could sit here on my screen and monitor my trade. I had a money-making stop in, so I went and saw my wife. The rule I live by is happy wife, happy life. Money comes second. So, any rate, I came back after taking the dogs to the park, I saw that this was dropping sharply, so I covered right there. Then I walked away. We'd eaten breakfast, I covered, took the dogs to the park in here, came back to see what was happening. I saw this candle forming down here, so I sold one there. And it started to work, so I sold another one. And these moving averages were all rolling over. I like rainbows of moving averages, okay, because they give you the energy flow. They're not real precise, but together they form the moving average convergence divergence. So here they converged, here they start diverging. Okay, now got this move going, and then I got distracted. I covered half here when I got a team viewer call. During that team viewer call, I pushed my stop too close here. I stopped out here. But that was a good day. I concentrate on taking pieces. I found that even with all these tools, I cannot get the top tick in the bottom. I can't buy it here, sell it there. If I can take pieces out of the middle consistently, I'm happy as a clam. So now, besides watching the market, being social at home, I also monitor the chat room on daytradingforecast.com. If you're subscribing to that and you're not monitoring the chat room, you're probably losing out on any comments that I could or will make. If I see something I think is important, I will make a comment. And I did on Wednesday. I always will come on and say good morning. And then when I looked at my helio chart, I said overnight drop bounce off a Mercury helio flux as it did on Monday. A higher low, possible double bottom. So right there, now these times are in mountain, so 5 o'clock mountain, 7 o'clock eastern. I did that. I also created a fractal pie chart, placed in the chat room. Those are for certified chaos traders. That fractal pie chart was saying that the down move was probably close to over. Then, wow, there was my stop hit at my 2250. And I point out, the Flash Boys, you have to understand you're competing with computers programmed by the brightest minds in the world. When they decide to buy, they can move the market dramatically. Interestingly enough, what they seem to have done is encoded the planetary energy stuff that I've been developing and following for years. News events can distort it for a short time, but in general, their algorithms tend to be following the energy flow in the market, which comes from the solar energy system. So do yourself a favor, though. You need to understand the environment you're trading in. Buy the book Flash Boys. It gives you an in-depth understanding of what games the Flash Boys are playing and how digital markets really work. So then after the open, I mentioned that hotline trade entry stop about 27.32. This volatility I mentioned, and many times it can run all day, so I mentioned that. And mentioned I was up because of full moon, but we had a Mercury double bottom, full moon, a couple of moon transits, end of a down fractal, creating a rocket. So then I point out the Flash Boys sold R3, but no, this is after the top. Right in there is where I had to go eat breakfast. Then when I sold in the afternoon, I did note that in the chat room, pointed out stopping in Daniel's chart. Here's where I got a team viewer call. Mentioned Canada is back. This is where I covered half and where I stopped out. Now at that point, I'm very proud of what I did there. Rather than stay and fight and revenge trade getting stopped out and leaving money on the table, I did what my good friend Jim 21 has told me: walk away. You got some money, you're profitable. Don't sit there and emotionally fight. If you take it out in the middle consistently, you'll do well over the years. So that's what I entered in the chat room. Some of the traders told me in emails that they found it useful. I do not try to call every trade. I want students to study how markets really work. My courses do that, and make their own trades. The forecasts and tools I've developed give you a big leg up on the competition. But it still takes hard work and dedication and patience. So that's the secret to cashing in on chaos. And on Wednesday, it was a very good day. My net for the day was $2,728 after commissions. So, and I showed you my my trading chart with the entries and exits marked. That's real time, real money, real life trading. So, just want to give you an example of cashing in on chaos. Thank you. You have a good day. And if you want to learn more, come to my website, moneytide.com. If you want to sign up for the hotline, it's $99 a month, pretty cheap. It does take some work, and you can interact with me in the chat room. And please get yourself set up on TeamViewer, because on TeamViewer I can give you quality support where I can show you charts, you can show me your charts, we can chat, and we can also talk. So if you want to cash in on chaos, I'll do my best to help you. I've got some good stuff, and with a little bit of luck, you too can cash in on chaos. So thank you for coming. Have a good day.